We are going to continue the section 2, source document and the recording. This chapter will be 2.2, business documentation. In this chapter, we need to understand what kind of document that we need to know the term for it, business documentation, and how we're going to use the documentation for the recording and what are the information normally in the business documents that we have. What is a source document? Source document is a written document that provides detail of transaction and evidence. Later on, I will show you a few types of the document that in the market, in the business that we can see. This is a base of the accounting record, means that the source that we do the debit and credit. What kind of the feature of the source document normally have in the document? For example, we have the date, we have the name and the address, description of the goods or service provided, amount, term and condition. Different company, they have the different type of the information, the feature, but more or less are the same. Okay, the first one, common invoice. Invoice is issued by seller to buyer for goods sold on credit or service provided. Sales invoice is refer to the seller book, which is from seller point of view, they call as a sales invoice. If from the buyer book, we call purchases invoice. Credit notes is a document issued by seller to the buyer for the goods return. This is a confirmation of the goods return amount. We use the credit note for the recording. Reason for the credit note issue is sometimes it's overcharged, goods damaged, the customer return it. Next is sometimes to inform the buyer the amount agreed to deduct and credited to the buyer through receivable account. So in the seller point of view, they have to officially or formally inform the buyer how much they agree to deduct. Debit note from the seller point of view, issued by the seller to the buyer for goods or service undercharge to inform buyer about the extra amount debited into the buyer account. Next is accounting record to be recorded by the seller and the buyer. So when seller issued the debit note, both parties, seller and buyer, must do the recording. Next is buyer point of view. It means when it's a buyer point of view, be careful of it. If the buyer issue the debit note to the seller, this is just to inform goods returned to seller and the buyer requests deduction on the buyer account. But take notes from the accounting point of view, no accounting record if the debit note issued by a buyer. We will have to wait for the seller issue credit notes, then only we do the recording. So there is a lot of time the mistake happened in the debit note. So in the question of the exam, debit note, when you read the question, you have to see whether they are talking from the seller point of view or buyer point of view for the accounting recording. So be careful it. If the buyer issued a debit note, no accounting record. We have to wait for the seller issue credit note for the accounting recording. Next one. Statement of account. Statement of account is a summary of a month transaction issued by seller to buyer. The purpose from the buyer point, from the seller point, to notify credit customer for the amount outstanding so that they can pay the outstanding. Buyer to compare his record with the seller for the reconciliation purpose. Next, check counterfoil. Check counterfoil is contain information such as payee name, check number and amount paid. So in this check counterfoil is a small booklet that we kept for our own recording, for our future reference. Receipt act as an acknowledgement of the payment receipt. Payment voucher record the payment of money to the third party. contain information such as payee name, check number, amount paid, similar to the check counterfoil, but it's in the paper printed out to get another party to sign on. Bank statement is a document sent by bank to its current account customer, contain information amount deposited and withdrawn for a month transaction. So this bank statement, bank will issue another month normally. Used by the business to check cash book, the bank column, and prepare the bank reconciliation statement. Payroll is a record in the system by the company for all the employee salary. Wages, sometimes we call wages. Wages is for worker. If you are the admin staff, we call salary. And any deduction also, it will show in the payroll system. So normally it's prepared by monthly, end of the month only prepare. Next, move on. Okay, this is an example of the invoice. For your knowledge, in different countries, they have different way of managing the invoice. For Malaysia, basically invoice don't have a standard format. Depending on the country, some country they have a standard format, government control, but Malaysia will not have the control. You can different design for your invoice so long as you like the design. You can give the customer all the information needed, then it's fine. Okay, credit notes. Credit note is a document sent to the customer when the goods returned to the seller. Same thing, credit note don't have the standard format. Individual company have a different way to do it. Statement of account. Statement of account is a document to summarize the monthly transaction and to show how much are outstanding at the end of the month. And normally in the bottom, they will put in the payment detail so that you can make the payment into their bank account. Bank statement. Bank statement, this is one of the bank in Malaysia. In this is a main bank. We have the date. We have this data, which is normally we don't understand really because there is a reference to the bank point of view. And this is a detail debit. And sometimes some company, some bank, they have 3 columns, but this one is only 2 columns, which is the balance. They will just show it in and out. In and out, they put into here, and then the balance show into here. A check and check counterfoil. This is a check that we give to the payee. So who is the payee? This is the payee name. Payee name will write into here. So this is a payee name will write into here. And this is the amount. And this amount must be same with the wording in here. You cannot make a mistake for this one. And the date, also based on the date that you have, you put it down. And this is a signature you need to sign. Okay. After you tear off this check, you will have a small check book. This one you kept for future reference for audit purpose, for in case the inland revenue come and check, you need to submit this document to them. This check document we call check counterfoil. So this is a document for check counterfoil. Okay, next move on. Okay, that's all for this topic.